Welcome to Worth and Wealth. The topic for today is what is generational wealth and why is it important? My name is Jennifer Duran, and I am a program associate here at the Office of Economic Empowerment, and I'm so happy to be here with you all. Before we get started, I want to share just a quick disclaimer. As a reminder, the webinar is being recorded, and I will send some more information in the chat for you all on this disclaimer. And also as a reminder, all materials, including the recording that's happening today, slides, supporting documents, and additional resources will be sent out to everyone that registered, including yourselves, by the end of this week. And now it is with immense pleasure that I'll introduce our presenter for today, Samanda Morales. Samanda Morales is an accredited financial counselor and coach who has a variety of experience from financial services, working with individuals on financial planning and coaching. She is the founder of Wealth&360, a financial education and coaching company, as well as Ahora, which focuses on the more nonprofit side, but also involves wealth building, especially with young adults coming into the workforce and Latinx community. I'm so happy that she's here to talk to us about generational wealth today, and I'll hand it off to Samanda. Thank you.
Thank you, Jennifer, so much. And I want to thank everyone that took their time out of their busy day to join today's webinar. So I definitely want to ensure that is a productive and an action-oriented session for you. So if there is if you have a question during the session, or if there's a comment that you would like to include, please include it in the chat, and Jennifer will be monitoring the chat. I also want to express that all information shared with you today is informational and educational only, and it's not to be taken for financial advice. So I'm going to share the presentation that I have for you this afternoon. And again, we're talking about generational wealth and why it matters. As Jennifer mentioned, I am a financial planner, financial coach, and all of the information that I will be sharing with you this afternoon, it's not just something that I learned from a book. It's something that I have experienced personally. I came to the States when I was a teenager. So a lot of the things that I had to learn going to school and growing up in the United States are things that I have learned from experience, and then I'm excited to share them with you this afternoon. That's the whole reason why I became a certified financial coach, just so that I can empower others to build wealth, but also to build generational wealth that you can pass down to your children or family members. So I want to share a study that was done that kind of highlights the importance of us understanding generational wealth and why it matters. So based on a study, 70% of families lose their wealth by the second generation. 90% of families lose their wealth by the third generation. So again, that's 70% the second generation, 90% the third generation. So that could mean a lot of things. That could mean education, or that don't have a plan to pass down our wealth to our children or our family members. But we definitely can change it. And this is why we are hosting this webinar this afternoon. How do we understand what generational wealth is, but also how do we pass it down? Let's rewrite our story. So what are the learning objectives for today? 3 main things that I really want us to walk away with. What's generational wealth? How do we define it? How do you define your generational wealth? And wealth is not just money and assets, but what's beyond that? How do we identify non-financial tools that we can use to build wealth, but also to transfer it? And I want us to commit to take at least one step towards your personal and financial legacy. So before I continue, I wanted to ask us a question that I'm going to read the question, then you're going to receive a poll. If you could instantly pass down one thing to the next generation, what would that be? One, paid off home, a successful business, a college education, family traditions and values, $1 million, or you just don't know?
We have a few answers coming in.
So yeah, so it would be great just if you're not sure, just say I don't know, but if it would be great to hear from you.
Okay. I'll close it up in a few seconds. But we're getting some responses in.
Yeah, what would that thing be? Can we pass down?
Okay. I'm gonna share the results. It looks like coming in at 27% is college education as the first one.
That's great. That's awesome. Paid off home, 20%, successful business, and 27% college education. Great. Thank you everyone for responding. And that's definitely very good choices. Okay, so now that we have talked about what generational wealth is and what's important for us to keep in mind, I actually want to talk a little bit more of what generational wealth is. And it isn't just money. And I know a lot of us, when we think about wealth, we always think about money or material things, or having a lot of money in a bank account, or having a lot of money at homes and things like that. But I want us to think about generational wealth, or wealth specifically, in a different way. There are resources, there are tools, there are opportunities that we can build and pass down to the next generation. For example, assets. Assets are things that have value, that grow in value over time. That could be real estate, a home or a business that you buy. That could be investments in an account. That could be knowledge, financial literacy specifically. I have to tell you, for example, my mother, she came to the States in the 1980s. She didn't have any idea of how to open a bank account, or she didn't attend school. But now, because of the opportunities that she gave me to come to the United States and obtain an education, I learned how to open a bank account. I know what are the different bank accounts. I went to school, and now there are things that I can pass down to my children. So it's not just, again, money that you can pass down. It's also education, business acumen, like how to open a business. What does it mean to own a business? And it's also a mindset that doesn't come from scarcity, but it comes from, how do I find the opportunity? How do I grow the things that I have today and help them to become more than what it is today? So I want us to also think about those things. What's the knowledge that we can pass down, or the mindset that we can share with others, especially our children? And then opportunities, access to education, capital, and network. It's something that we don't think about. As we meet other people, and especially in different industry, if you meet someone at a bank that provides loans for homes, now you already have a contact that you can share with your next generation of what are the people that you need to talk to, what are the organizations that you need to include when it comes to buying a home, for example, or filing your taxes. So there are networks that we can acquire professionally, but also personally, that we can share with others in our family and especially our children. So again, three main things: assets, knowledge, and opportunity. And then I understand that each of us have a different stage in our lives, and some of us are already in the growth phase, where a lot of us are already nearing retirement, but there's some of us that could be just starting now. So I want to talk about 3 stages of life and how to approach a wealth building in those 3 different stages. So if you're just starting now, you're building. And that means that you're building habits, you're putting together what does it mean to just make decisions financially, having more clarity of things of where do you want to be in 5 years from now, in 10 years from now, or where do you want to build your roots at? And then those things happen when you're just starting out. What are the jobs that you need to have where you can earn a good income and then use your income to build assets? If you're in a growth stage, then you optimize in what you have. If you already a mid-career professional, then how do you improve the income that you have today? Like, where are the opportunities that you can look for optimizing your profit? And I don't mean profit just monetarily. It could also be the value that you bring to that particular job or that particular business that you work for. And then think about, okay, how do I protect what I'm building? For example, if you already have a home, how do you protect your home from any kind of emergency? If you have investment accounts, like a retirement account, what are the things that you can put in place to protect what you are already growing? And then how do you scale? How do I take what I'm growing today and just make it to where it could be a comfortable life that you can have during retirement, or maybe you just want to take trips once a year. So there's a lot of questions that come into play, but we'll keep talking about what does it mean? What are the things that you can put in place if you are in those 3 stages? And then if you're nearing retirement or you are in retirement, then what are you doing to transfer not just your wealth, but also your wisdom and all the things that you have learned, like professionally, but also personally throughout your professional and personal journey, that you can pass down as a mentor to other young professionals or your children or other family members in your circle. So um, so I wanted to say before I continue that if you have any questions or any comments, or if anything resonates with you, you can put comments or questions in the chat, and then we'll have a few minutes at the end of the presentation to address any questions that you have or any points of clarification that you would want me to provide. Again, I want this to be interactive, informational, and action-oriented. So please share those thoughts and those questions during my presentation, and we'll definitely address those before we end our webinar this afternoon. So now I want to talk about the wealth building cycle. And I put it together as a cycle because there is a one size fits all for building wealth. And there isn't also a point where you can feel like, okay, I'm done. I don't need to worry about it. I am done building. It's more like a cycle. And it starts with the building. And the building, and we'll go into more details on what it means to build. And then it goes to the growth stage. And then it goes to a protect stage. And we talked about a little bit about that in the previous slide. And then we have to think about, okay, how do we transfer? What are the things that we can leave as a legacy for our next generation? And then there's times that we just repeat that process all over again, depending on the phase that we're in our profession, in our personal life. And when we're in the growth stage, and I mean, it's not just how much income I make, because just have high income may not necessarily equate to having wealth. It's what you do with the income that you have that actually translates to building and growing. There are times that we make a lot of money, but then we could before our next paycheck, and then what have we build with that income that we have. So that's what the thinking that I want us to go into as we continue with the presentation. What's the income that I'm making today? And it's not how much I'm making, but what is it that I'm doing with the income that I do make that it is building and growing. Okay, so now we're going to go into details what it means to build. And when I think about building, I think of foundations. Think about building a building. Without a strong foundation, a building cannot sustain itself for a long time. So we definitely want to build strong foundations as we continue to build our wealth and pass down as generational wealth. So what does it mean to build strong foundations financially? I know a lot of us, especially those that came and have grown in an environment that we are just taught to earn money and work really hard and save and just go through a survival mode. We're just paying bills. I'm just getting through the day. I'm just getting through paying my bills. I'm just getting through just paying debt. So we continue in that cycle of survival mode. We just earn, we save a little bit for things, and then we just survive. But I want us to challenge ourselves going forward to think about, okay, no, I'm not just earning, saving, and surviving. I'm owning, I'm growing, and then I'm going to transfer. We're going from surviving to growing to building. And one of the things that we can tell ourselves to reframe that mindset, I just need to make more money, or I just don't have enough. Instead, okay, let's look at the opportunity. What's the opportunity that exists for me where I am today? If I'm only making $100, okay, what are the things that I can make with the $100? So there are things that we can do to shift our mindset to move from that survival mode to a building, growing mindset and mode. And then I like this next point because we don't think about ourselves, our personal selves, as having our own team, but we do. If you think about it, we file taxes. Do we have a tax person that can guide us through filing taxes and can educate us more on how to minimize the liability of our taxes? Do we have a relationship at the bank that we go to that can answer questions for us? So think about yourself as a entity that needs a team around you that can use the income that you're making and turn it into assets. And those assets can turn into legacy that you can pass down as a charity that you can use to fund your favorite nonprofit, or you can pass it down to your children again, or to family members that are continuing your legacy. So think about who do you have in your circle that could be part of that team that can help you do that. Turn income into assets and assets into legacy. And then the next thing, okay, if we talk, when we think, shift our mindset, refrain from just saying, I need more money, looking at the opportunity, who's on my team, then I need to understand, okay, where's my cash coming from and where is it going? And that is where tracking cash flow comes from. So we're going to talk about more, I think, the following week about budgeting and building a plan to save. But I want to highlight really quickly that a budget, it's not the same as tracking your cash flow. Tracking your cash flow means is just seeing your bank account, okay, what's coming in and then what's going out. Having a budget is basically how do you plan every dollar that you have to meet the goals that you want to achieve, but also to address the challenges that you have. So if you feel like you live in paycheck to paycheck, a budget can give you a roadmap and a plan of how to address those pain points of not having enough or just living paycheck to paycheck. And we'll go into a little bit more of that next week. So please come back next week and we can talk about more about budgeting and also building a plan for your income. And then the next one, how do we build those foundations? Teach your children, your other family members about financial education, financial literacy. It starts at home and it's never too early. I remember when I have a 19 and a 17-year-old, but when they were younger, even when they were toddlers, we talked about the importance of saving and not spending. So every time we went to the store and they wanted to buy a toy, we talked about trade-offs. Okay, we bought a toy last week. Do you really want to buy a toy? What if you save some money and then buy one that you really enjoy later on? So there are things that we can even teach our children, whether they're 3, 4, or 5, or teenagers, that builds that financial literacy and that financial education that can help them make better decisions as they get older. So, like, for example, whatever you're learning today, just go back home and talk about it with your children or your family member and friends. And then the next one is an emergency fund. And it's recommended to have 3 to 6 months of what I called essential expenses. So if rent or mortgage payment or utility bills, and we will talk about more details again next week, but having that emergency fund will help you not have to use your credit card or having the need to have a personal loan. So that emergency fund is definitely key. If 3 months, it's not feasible, just 1 month. If 1 month is not feasible, then $1,000. But at least if you have some kind of reserve that you can tap into in case of an emergency, that's what matters. Small steps have big results. And then managing debt strategically, it's important. It's great to have credit available in case of emergency, but the bad thing with credit cards specifically is that interest compounds. And then your $100, for example, if you have $100 balance and you don't pay it all at once, then that balance becomes bigger because now you have to pay interest on that. So just being aware of, especially credit cards, of how much are we spending, how much do we need to pay each month, just to reduce that balance and not allowed your debt to get so out of balance that now it's bringing you back to this survival mode. And then start investing for retirement early or even pre-retirement. And I know we're also going to have a webinar about investing 101. So be on the lookout for that. So I know it's not something that, again, we talk about on a day-to-day basis. How do we invest, not just for retirement, but pre-retirement? But it's important. Every dollar that you invest today, it grows over time. And the longer you have it invested, the higher returns you will have over time. And then our next phase is growing. We built our foundation. So, okay, how do we start growing? How do we start accumulating? And again, it's a mindset. How do we put our money to work? Some of the examples I have listed here is increasing your retirement contribution. As your income increases, increase your retirement contributions, or your savings contributions. If you have additional income that you can invest, you can open what's called a taxable account or a brokerage account. It's basically a pre-retirement account where you invest in dollars that you can have access to before you're retired. If you have children or grandchildren, you can open a 529 education savings plan that it's not taxed if you use for education, and it grows again tax-free, where your children or your grandchildren, they don't have to pay taxes on that if used for educational purposes. And then HSA is a savings that you can open. There's some specifics to that we can talk about in our next webinar when we talk about investments. But if you have access to an HSA, it's a savings account that you can roll it over the years and you can invest it, and it can be used for medical expenses. You can diversify your investments and invest in real estate. So if you have access to invest in a small business, or you can start a small business, or open a side hustle. I have a friend that has a decorating company, and she decorates for birthdays and weddings. So that can become also a side hustle and a business for you. And then focusing on those multiple income streams, especially if you want to be in the growth phase, maybe a part-time will be an option, maybe working extra hours, or maybe just doing work outside of, normal hours, where you can increase your income a little bit more and then start investing. It's not something that you're going to do long term, but it could be something that you can do short term as you go through that growth and accumulation stage. And then a key lesson here that I've seen throughout the years is that growth happens when we reinvest. And we just don't earn. So we earn, it's good to earn, but how do we reinvest it for growth? And then how do we protect what we have already built? We got to shield our assets, the things that we have worked really hard for, and some of the things that we can use to protect what we have already built or what we're building. It's the first one is insurance. If you have a family that depends on you and your income, it's life insurance. It will be an option. If your job is dependable of your physical abilities, maybe having a disability insurance will be really helpful. If you have a home or property insurance, if you have a business, then having a liability insurance will be really important in case something happens in your business or people that you serve. Those things are really important, and they're not things that we really have in our mindset day to day. But when unexpected emergency happens, it's really life-saving to have those types of protection. State documents, wills, powers of attorney, what are for your retirement account, for example, if something were to happen to you, then who has access to those accounts? Who is the beneficiary in those accounts? So those are things that we really need to have in mind as we protect what we are building, our wealth and our assets. And having tax efficiency and strategies. And we'll talk about those things again when we talk about investing, but there are things that we can put in place that, again, minimize our tax liability. And as we minimize our tax liability, that can also increase our cash flow, and we can use some of those things, some of that extra cash flow to invest and grow. For example, if you have a high tax bracket, investing pre-tax into your retirement account will reduce your taxable income. So if you guys have any questions or information that you would like me to share after this webinar, specifically about tax efficiency strategies, please include that in the chat, and Jennifer will definitely let me know. And then another thing that as business owners that we don't really think about, because we're so involved in our day-to-day and growing our business, but also servicing if we have clients, is how do we protect the business and the assets that we build within our business. So it's those are the things that if you're a small business owner, you're thinking about opening a business, those are some of the things that you definitely want to keep in mind. And then the key lesson is that protection keeps our wealth and our wealth plan from unraveling, from being destroyed, from just not being there when we need it. And Jennifer, do we have any comments or any questions so far?
Yes, we did just get one in. Someone, Nicole. Hi, Nicole. She mentioned, I heard that there can be a lot of taxes when someone inherits a house Can you talk about that in the future?
We can definitely talk about that in the future. So that's a great question that we can address in more detail when we talk about the investing in more tax efficiency strategies. So anytime you get a gift, or especially a sizable gift, there are taxes that are included in that particular gift. But then there are also strategies that we can put in place to minimize that tax liability. So I'm going to make a note of that, and I will certainly include that when we talk about that uh, that topic during that webinar. So if there's also, if you're selling a home, there is what's called a capital gain tax on that equity, but there are tax credits or reductions that you can have if you're a single owner. For example, you get up to $250,000 as a deduction for that capital gain. If you are a married couple, you get up to $500,000. So for example, if you bought a house for $500,000 and you sold it for $700,000, there's no capital gain tax there because you get up to $250,000 of tax reduction for that gain. So I hope that answered the question at a high level, and we're going to more specifics during a later webinar. And then how do we transfer it? How do we pass it on? I know we've focused a lot on building, growing, but then how do we put plan in place to transfer it? Especially if we are in our 30s or even 20s, that's not something that we're thinking about transferring or passing it on. But we should, because you just never know when things can happen, when unexpected emergencies can happen. So we need to ensure that the assets that we have built or that we are building, and also the wisdom that we have, it's passed down to the next generation, especially if we have children. So things like live-in trusts, beneficiary designations, and even a savings account. If we have a savings account, we should have someone listed as a beneficiary in case that something were to happen to us and we don't have access to that account. Like, who can access what's saved in there, and who has the authority to do that? Or live in trust, if something were to happen to you and you're not incapacitated to make decisions, like who can make decisions for you and decisions for your assets? Or 529 plans, as I mentioned at the beginning, if you have children, or maybe if you have grandchildren, what are the things that you can help them do now to help them build a more sustainable financial future? And a 529 is a great option for that. For those that are not of us, but I don't have grandchildren, but if you have a grandchild, you have the opportunity to also open a 529 plan savings account, specifically for education for your grandchildren. If you own a business, how are you going to pass down that business? Is there a plan in place to pass down the business to a partner or even to a family member? And once again, how do we pass down what we've learned? How do we pass down a financial literacy that we have not just learned throughout the years, but things that our children should learn as we go forward or as they continue to grow? What are the things that we should tell them? And one of the things that I've seen families do is writing a family story or a family paper where the children understand how did your family get here? What were the things that you learned throughout the times that you were here? So those are things, stories, values, but also knowledge that we can write down and pass it down to our children and their children in the following generations. things that we don't want to fall within that 70% of the second generation lose their wealth, and then 90% by the third generation. Like, we don't want our children to be in that number. So passing down that knowledge and that literacy, it's definitely a positive step toward that. And then our key lesson is wealth is more than money. There are values, knowledge, and assets that you pass down, assets that grow in value. And then we just repeat. We revisit our plan. We revisit review our bank accounts. We review our investment, and we start this cycle again. There are times, depending on your phase that you're going through professionally and at your age, that you may have to revisit your life insurance, and you may have to revisit your liability insurance. So it's not a document, or it's not a plan that is done and set aside. It's a plan that has to be reviewed at least, every 2 years or once a year. So our goals change, our challenges change. So we definitely want to make sure that we are revisiting. And if you need to restart that cycle, we're doing it again. And we are adjusting those plans as we go forward. Our laws also change, tax law changes. So that is also a big one that we need to keep in mind. And each generation restarts the cycle, and with a stronger foundation. Again, my foundation was different than my parents. My children's foundations is different than mine, because now there are things that I passed down that they now know that I didn't know. So it's something to also keep in mind as a positive, that my next generation is going to start stronger than I did, because of the things that you went through and that you learned, but also the things that you're passing down. And consistency creates compounding results across time. Consistency creates compounding results across time. So let's not give up, and just keep doing it, keep building, and small steps give big results. So before we go, I want to kind of all put together, and I have put a case study of a family. I called it the XYZ family. And I want to go over like actual examples that this family has put in place to go through that cycle of wealth building. So the background is that the XYZs are a young couple with 2 children. They want to buy a home. They want to invest in a brokerage account, which is a non-retirement account, but they also want to invest for retirement because they want to retire at some point and live and travel and enjoy life a little bit more. They also want to help their children with college, and at the same time ensuring that their own financial security is in place. So this is our case study for today. So how do they lay the foundation? So they first start with creating a monthly budget. Where is my money coming from, and where's my money going? And they're paying down debt. At the same time, they're also saving at least 5% of their income. So you're paying down your debt, and if you can save at the same time, 5% of your income is actually a really good starting point. They built an emergency fund that can handle unexpected expenses without the need of relying on credit cards. Again, credit card balances increase over if you don't pay them off. So having an emergency fund there is good for the XYZ family. They also deposit the emergency fund in an account that is generating interest. And we'll go over that into more details when we talk about our saving strategies next week. They also began contributing to a retirement account offered by their employer. So I want to mention that even if you work for a small employer that does not offer a retirement account, there are options available for individuals that want to invest. And I will definitely, it's something that we can talk about at a next webinar, or the one about investing. So it's definitely going to be part of our webinar series. And even if you feel like you don't have a lot of money to start investing for retirement, Small amount at first makes a difference. So it's building the habits and just building the consistency to do it, even if it's a small amount on a monthly basis. Just building those habits and the muscles of investing in retirement accounts, it goes a long way. And small, consistent action steps at the starting point for generational wealth. Small and consistent. And then their growth phase, they're buying a house. They saved a small amount of money for a down payment. They are making more income now, so they increase their contributions to 10% of their salaries. Now they're investing more in a non-retirement account so they can have access to before retirement. They're also open a 529 college savings plan for their 2 children. It's never too early to start one. They have partnered with they have built that team that we talked about at the beginning, that the team that's going to help them build their assets. So now they have a professional person that does their taxes. They have someone that helps them with the investment, and they also have a plan for their cash flow, how to take the money that they make and maximize it to meet and achieve their goals. And then one thing that I definitely wanted to include here is owning multiple assets. As you can see here, there's a retirement account, there's a non-retirement account, there's a 529 savings account, and there's also a home. So this is a good, diverse set of assets that this family owns. So it's definitely just building wealth and from many different angles. And then the stability and protection, they have what's called a term life insurance. If something were to happen to them, their children will be secure financially. They have wills that they have updated and trust to simplify the inheritance for the children if something were to happen to them, and to avoid probate. Meaning, if you don't have anything in place, it goes to the state, where the state will now review and make the decision of where should your assets or your wealth go. And that's usually a long process. So if you can put things in place to avoid the length of probate, it will be helpful for those that are in your will or live in trust. And then continue to model healthy money habits and involve children in the conversation about budgeting and investing. And again, it's never too early to involve our children in that conversation. And I know a lot of you will relate with my following comments. I grew up in a home where money was not talked about, where budgeting was not talked about, and where investing was not even part of our vocabulary. So I know a lot of us grew up in that environment, but now that we are aware, now that we know, we definitely should involve children in that conversation, where having a money plan, it's something that we can teach our children to have and being part of that conversation. Okay, I have another question for you. So after all the conversations that we've had and the topics that we've covered, what do you feel is the most valuable gift to pass on to the next generation? Are there financial assets, financial literacy and money skills, and education opportunities? Again, family traditions, values, and family stories or stories in a clear plan, or maybe you're just not sure. Just give a few minutes to think about that. I wonder if your answer changed after having gone through some of these topics.
We have some answers coming in, so. Just a few more seconds. All righty. I will end the poll and share the results.
Nice. Financial literacy and money skills. Love it. So 50%, yes, that's great. Thank you for answering the question. It's definitely something that that can be passed down through generations. So what are our key takeaways? The generational wealth is more than money. It's assets, knowledge that we pass down, values that we pass down, and opportunities that we create. The wealth cycle is ongoing, it's building, it's protecting, it's transferring. And if we need to repeat it, or our next generation will have to repeat it. What are the small steps that compound into legacy? And consistency, as we talked about, beats complexity. It doesn't have to be complicated. It just has to be small and consistent. And your legacy starts now. Even if you are in retirement or near retirement, it's never too late. It starts now. One intentional action that you take today creates momentum for future generations. Opening a savings account for a grandchild today, it's a huge step that can create a momentum for that for the future of that child. And non-financial tools are powerful, like financial literacy, traditions, communication strengthen wealth transfer. If our children or our family members, they don't know what we know, or they don't understand our traditions or our family values or the things that we have built, they're not going to know what to do or how to plan for it. So definitely communication, it's a great vehicle to strengthen that wealth transfer for our next generation. So I want to thank you again for joining this webinar, for answering the questions. So if there are any additional questions or comments, please share them now. And then at the end of this webinar, I know Jennifer, she's going to share some resources from today's webinar. And then if you have any questions that you want to ask more as a direct basis, you have an opportunity to schedule one-on-one financial coaching with me. And during that session, we can go into details and specifics about your particular challenges and goals.
Amazing. Thank you so much, Samanda, for that. I will close it off, but as Samantha mentioned, I'll give you all some time to send any questions you may have in the chat in the meantime as we close. Samantha, is it okay if I share real quick?
Yes.
Thank you. Awesome. So our next webinar is September 17th, next Wednesday. Making the most of every dollar, which as Samantha mentioned throughout the course of this webinar, it's all about budgeting basics, and the difference between budgeting and tracking your expenses, which is going to be super useful, as Samantha mentioned, to building that foundation. You can scan here, but I also will provide the link in a follow-up email. And you know what? To make it even better, I'll drop it in the chat as well. So it'll all be easy peasy. And after that, as also mentioned, please sign up for free financial coaching. It's such a wonderful opportunity to just meet with a professional who you have right here and talk about your own personal experience. As we know, personal finance is very personal, so having someone to talk to that can tailor it to your needs is super essential. And then lastly, if you want more on-demand financial education, I recommend that you also check out this free platform called Enrich, sponsored by the state treasurer, where there's a ton of resources from blogs, courses, quizzes that you can take, all in regards to your financial health and well-being, completely free to you as well. So I will end it there. It looks like we don't have any questions in the chat so far. But Samantha, I want to thank you for such a wonderful webinar. And we will see you all next week. All right. Bye.
Thank you. Bye.